At Invictus Consulting Group, we recently published a research report called Buyers and Bleeders. What we found is that over half the banks in the country need to participate in some sort of M&A activity. 2,000 banks need to sell, or they should sell, because they don't generate enough of a return to justify standing alone, and they don't have enough capital that's free to them, that's not restricted by the regulators, to invest back into the bank. Meanwhile, there's another 3,500 banks. They have plenty of capital, but they're having problems deploying it because there's not enough loan demand in their markets. Those banks should be buyers so they can deploy that capital. So what we did was we ran every bank in the country through a stress test. And what we discovered was bank failure is really off the table. That's not as big an issue anymore as it was back in 2009. However, bank capital is the problem. And you could break down a bank's capital into two segments. You have capital for defense, capital for offense. Capital for defense is what the regulators want the banks to have as a cushion against another financial crisis. Capital for offense is what's available for the bank to invest back into the business, to distribute as dividends. At Invictus, we actually coined the term free capital. That is the capital they have available for offense. What our study found was, even though there's 3,500 banks who have plenty of capital and should be buyers, the amount of capital they have that's free capital, capital they can actually spend on acquisitions, is only a sliver of their total capital. Therefore, even though there's more than 2 buyers for every 1 seller, the amount of capital those buyers have is very limited. And if you're a potential seller, you better think about selling sooner than later, because you might be left without a dance partner after those banks spend those free capital to our buyers. So as the economy improves, access to capital will increase, but for many small banks, they'll always have a limited access to capital just because of their size. What they really need to be looking at is their markets and the loan demand in their markets. And for a lot of pockets across the country, loan demand is increasing. We're seeing a lot of banks increase their C&I books and their commercial real estate portfolios. So bankers really should be looking at their markets and the potential for increase in loan demand.